We had a reasonably good quarter in Q1. We know we grew at about 4% quarter over quarter, which is pretty good given the environment today. And in addition to that, we are focusing more on the profits now. We know the company, as an organization, we have not really done well earlier. So it's a turnaround. We are in the process of turnaround. So we have moved to EBITDA positive, which we moved last quarter, and we have moved further into EBITDA positive. So we continue to grow strongly in terms of the profits, and it will take some time. So, but it is it's in the very positive direction that. The third element is that some of the, for organizations like us, the cash flow is very important, and the cash flow has become positive now, and with some of the large wins that we have really happened in the past, it has been pretty good. We were under debt at some point of time. Today we have become debt free. Last 2 quarters we have been at debt free. We have a very nice would be we would like to go further in that, but it is a good bank balance at this point of time. So generally it has been a very positive quarter on all segments. In terms of the wins have been very secular in the nature. Is that one is that primarily we signed up with in the aviation we have mostly in the back office of the aviation, which is on the whether it is in the airlines, primarily looking at their maintenance, their supply chain and all those things, or in the MRO, which is a very different industry for the aviation, servicing aviation. We have been fairly present in MRO in many places, and we have won a deal from Canada, which is for the Transport Canada, which is primarily looking at the heli operations for this thing. It is significant in 2-3 aspects. One is that it is our first win with the government. It's a government agency, not through an intermediary, directly with the government. Second, it is on the defense. And third, whatever we have been using in our special operations with respect to the helicopter providers, we are doing the same thing for the aviation, and it is a highly regulated body. So that's a fantastic win. That is something that we have really had. And with respect to the ERP, we have won in a couple of cement ERP orders, primarily in Asia, in Philippines. These are very good wins. And third is with respect to the HRP, we have won well in Australia and in APAC. So in terms of the deal wins, it has been pretty good. We have closed at about 19 million last quarter, which is fairly good. And this is again the back of around 23 million the previous quarter, where we won a very large order from the Korean Airlines. So generally in terms of the order book, we are in a very good shape at this point of time. Other noticeable highlights, the noticeable highlight is that we have also created a set of processes that can really make our implementation and other processes really smooth for the customer. The very first one that we have done is that we have gone live with one of the large airlines in Asia, which is the implementation with the new process that has formed. It was under budget and on margin, so all parameters are being met. It is a very significant turnaround effort for us. That is number one. And in addition to that, the second one is that the new modern HRP platform, which is SaaS-based, PACE, that we launched 3, 4, 5 months back. In February we launched, and we have had multiple road shows. The very first implementation that has really gone live, that is in the Middle East. PACE will be always a smaller order. Whatever we have won, we have close to around, I'm giving you a ballpark, I don't know exactly that order, but in the ballpark it will be around some 5 to 6 million, depending on the number of countries that you serve. The larger number of countries you serve, it will be more, and this is small. See, the aviations are all larger orders. The HRP will be smaller orders. That's the nature of the game. One is we are dealing with a very niche market. The other one is that we are dealing with the horizontal market. Right now, what is really ticking us is HRP is one, and I would like to talk about one HRP and also with the aviation. HRP is primarily the payroll side of that. It is not about the strategic HR, payroll HR. The new product that we have really launched has got a fantastic reviews by the customer, and so many interests of that. and we are looking at closing some of those deals at this point of time. So that looks promising. It's a very horizontal industry, and it is horizontal, and also we have close to around some 63 countries on our code base. See, that's a very regulated industry. It's not like any other software that you do, right? It is regulated because each country has got a different set of rules for their payroll, and within those countries different provinces have something, then different cities, and within that different industries. So you have a lot of specifics in different areas. So our code base captures everything close to around 65 countries. The remaining countries we service through our partners like Deloitte and Bijoy. That is number one. The second thing about that particular the payroll is that the biggest issues have been so far in terms of how long it takes to process a payroll, and now that has really shrunk because of the modern platform that we have really done. The payroll, we have created a very custom parallel processing. So what was initially taking around 8 hours now takes less than an hour. So it has really shrunk in a big way, and that is really helping the payroll operators in many ways. The implementation used to take very long, so that has really come down, and now the implementation is of around now 6 to 8 weeks. It used to be around 9 months earlier. So that is a very good segment, and we are seeing a lot of traction. One is that the attractiveness of the UX and what we have really done, and also the performance. So that's a very promising sector, and we are seeing a lot of interest there. The second one would be the aviation, where we have recently won some couple of large orders. This is some of the one we have done with the Korean, and now what we have done with the transport. And this is a very niche segment where there are literally not too many providers are there. And this is a rapidly growing space. If you look at the MRO side itself, it is around close to $100 billion industry, and the IT spend would be somewhere around $2 to $3 billion, and it's a lot of new MROs are really coming up also. So in that there are three, and that is, it's not a monolithic. It is again three different parts are there. One is that you see the aircraft, you see the body of the aircraft, right, which is structural, so which is called as a airframe MRO, and that we have been doing it for a long period of time. Then in the body, you peel the body, you have the components of the different pieces, your landing gears are there, different pieces are there. That we have a component MRO, that is something that we already have. The most complex, the holy grail of aviation MRO is the engine MRO. The engine is one of the most complex parts, and we have also launched that product, and some of the recent wins are in the engine MRO space. So we are there across this thing, and that segment we are seeing a lot of interest in that segment there. And the good thing about that segment, it is a growing segment. You look at the number of MROs that are being set up as the private aircrafts go up, as the military this thing goes up. So a lot of MROs are being set out, and that is where we see a tremendous amount of prospects. So I would say HRP, and I would say aviation MRO. We are EBITDA, we are positive right now at this point of time, and we have a long way to go. It's a transformation time. It will take time. We are transforming a 25-year-old company, and we are turning the Titanic in a different direction. So it will take time. The measures that we are taking is, one of the things are very plain: the cost optimization in terms of resource optimization. Right? We have had too many people, and we have had a lot of those things. So we have optimized resources, and that is something that we did some time back.
From what to what?
We reduced somewhere around 400 people
over a period
of 4-5 months, roughly 4-5 months. Some are voluntary; they also left because some churn, the attrition happened. We didn't really replace it. That is one. And some, based on this thing, the performance, they were really let go. So these two things happened. So that is number one. That normally goes. The second important, see, I have been in the industry for a long time, and the cost is not the only way to go. That's one of the ways to go, and that is a starting point, and there you stop somewhere on the cost, right? Because sometimes we, as a product company, we cannot lose the knowledge. In a services company, the knowledge you can always get and hire, but product is that the product knowledge is a tribal knowledge. It's a deep-rooted knowledge. That is something that we can't really lose. The second area we are looking at, the most important lever for the profitability, is the price increase, and that is something that we have done. Across the board, we have increased the prices. And
what level?
So this is something, it's much better than where we were. So that is number two. The price really increase has really high, because we were really underpriced for a very long period of time. We have improved it. Third thing, how do you really cull out our inefficiencies, right? First you start left shift, right? Start from the deal. This is how I construct the deal. This is how all the things that I would really do, and these all. So define the scope very tightly, how you are going to engage with the customer. Then the governance cadence really helps you in primarily identifying the problems early, making the implementation cycles faster, and raising change. We are doing a lot of new changes and additional requirements free of cost. We have not even looked at it at all. So all those things can be really costed to the customer, priced to the customer, because we are servicing something new. We are servicing something new which was not there in the original scope, that directly adds to both your top line and bottom line. So we have taken all these aspects in terms of improving the profitability, but it is a journey. It will take time, but it is trending positively. So that's a very good question. All these things, one is that you have the numbers and other thing. That's all one side to it. The transformation should be always a holistic exercise. It cannot be just focused on one thing. So one is a financial thing which we spoke about, right, in terms of the deal reviews, in terms of improving the profitability, and even in terms of you look at there were several non-paying customers who are there. We cut the service to them, and a lot of them came back and started paying, and that's what your telephone operators, they do to you, right? We did the same thing. It's a hard call to take, but we took that call. One is the financial transformation that is underway, and the second thing is that in transformation in terms of the implementation, right from how do you, the sale process, how do you really construct a deal, what kind of contract that you will really have, and how do you really implement a deal, what kind of cadence that we will have, what kind of periodic reviews have, the complete cadence that we really have in terms of that is something that has been reimagined and re-established. And in fact, one of the earlier wins about the earlier implementation, what we talked about, these two things, one is for the pace and one is for the aviation, all went through this process. That is something that is being done. So second thing is that implementation side. The third thing is in terms of the product side. We are a product company at the end of the day, and what kind of product that we really want to have, and what is that we won't really do. It is important to establish that what we will not really do before you decide what we will do. So there were many areas where we were not really profitable, that really did not hold a lot of potential. We have culled all those things.
Examples?
For example, the container management and logistics. We said we will not really touch it. We will not really touch it. Just whatever we are committed, we will do it, but that is not an area for growth for us. And let us say doing a lot of things, let's say something like a container management, let's say in Africa, we said we will not really go there. We will not really go there. So we excluded some geographies. We excluded some the product areas that where we will not do. We will said we will focus on only these two things, and these 2, 3, 4 things, and do it very, very well. So this is with respect to the product. The third aspect, so we had in three things, right? We talked about the product, we talked about the financial, we talked about the implementation, and the fourth important thing is that the technology. We are in the technology that really still works very, very well, but we are also modernizing as we speak.